Speaking of banks and the economy, did you know that Janet Yellen, the chair of the Federal Reserve, is testifying once again today? And we have our best people watching, I can assure you. Essentially, so, well, you don't have to, so it's how we operate around here. But there she is, Janet Yellen. Meanwhile, home buyers are rushing to buy while rates are low. We have these numbers showing existing home sales rising. That's a 9-year high in the month of May. We're joined now to talk about all of this, whether it's Janet Yellen or the housing market in general, by the Chief Economist at Nationwide, David Berson. And what do you make of that at this point? Where are we in housing?
Well, Connell, the housing market continues to expand, and there are really no signs it's going to pull back. But I think we've got a lot more room to go. We're not at the level of sales or starts that we were during the housing boom, nor do we want to be there. But even with that, I think there's room for the housing market to expand further.
On the point of Yellen, though, as I joked around about, we have our best people watching her today. One of the points she's been making, not only the last couple of days, but in her previous remarks, is that it looks like we could have interest rates low, even if they do raise at some point this year, low for an extended period of time. How do you expect homeowners or potential homeowners to react for the rest of the year? People rushing still to refi, take advantage of these low rates? And if so, how does that impact kind of the composition of the market?
Well, certainly people have been refinancing heavily this year and really over the last couple of years.
Yes.
But unless rates fall further, you're going to have fewer and fewer people who can refinance because they will have already done so. Now, on the home buying side, the low mortgage rates are certainly beneficial, but what's more important is what's happening in the job market. Job and income numbers are always the most important thing for the housing market. And, I think the May non-farm employment numbers were probably an anomaly. We'll probably see decent job numbers going forward. I think that's going to push the housing market up. And as long as mortgage rates don't skyrocket, I think there's little prospect of that, then the housing market should continue to expand over the rest of this year.
What's your argument for anomaly? We have others that have come on and said the employment market, I should say, the job market is not, it really isn't so hot, that it's going to struggle for some time, be, so-so at best. What's your argument that those recent numbers were an anomaly and we will see better numbers going forward?
If you look at the weekly jobless claims, they remain historically low, so businesses are holding on fast to their workers. They don't want to let them go. They can't find qualified workers. Then if you look at the job labor turnover survey, the JOLTS numbers, again, it shows record numbers of jobs that are out there, and that it may not be hiring as quickly, but I think that shows that the job market has been pretty good, that a lot of the qualified workers are already hired. And we're not going to go back to the 230, 250,000 per month. But
right.
Under 100, I think, is too low. I think we'll probably get to 150 to 200,000 per month for the rest of the year.
Is there any risk in terms of the economy, just to kind of follow up on this, and we were showing a promo for our coverage of this British exit vote that's coming up, of that, I mean, say, and I know the polls have been showing that it looks like Great Britain will stay, but if they did leave, is that a large risk factor for our economy, for the U.S. economy, when you put together your forecasts?
It's probably not a big long-term risk for the U.S. economy. In the short run, financial markets could panic simply because we don't, it's not happened before, and so we could see a flight to safety, Treasury yields going down, pushing mortgage rates down, which could be positive for the housing market, and some hiccups with trade. But I think whether we get the UK leaving or staying in the European Union, the impact on the American economy is probably going to be pretty small.
Okay, so it's a little overstated, all this attention it's getting, is your view?
Well, I think it's overstated for the U.S., except maybe for some short-term movements in financial markets. But for the real economy, what it means for jobs and income, I think it's going to be very small here.
Okay, David, thanks. David Berson from Nationwide on a number of different subjects.